All right. So we're going to talk about gold. Um, how you can successfully trade the gold easily by um, focusing on what we call the opening price. Okay. Now there are two main types of opening prices. There is when you see a bullish opening price, when there is a red candle and then there's now an opposing candle that goes in the other direction of the first candle. So that bottom bit here is what we call an opening price for the bullish. So what we're expecting the market to do is pretty much to come into this level and then move up. Just take that again. We want it to come back to this level right here, okay, before it will now eventually go up. Okay, so that is a bullish opening price. However, we do have a bearish opening price. Same thing, but opposite. When we have a green candle and then we have a red candle, all right, that is opposite of the previous candle. So then we'll call that also a bearish reversal open price. So basically what we expect the market to do is just to come to this level and then come down, which it did about 3 weeks ago. Okay. And then, the last type of open price that I want to talk about is continuation opening price. Now, what does that mean? When the market took out this high, okay, the way I look at the highs and lows is actually when we have two opposing candles like this. So this candle broke that candle, okay. So then the middle of it, then we can see another green candle that went up, okay. So that middle section here is what we call continuation. As you can see, how the market came back into that continuation level before going up. Okay, so those are the types of opening prices I want to obviously talk about today. All right, there are other ones, but these are the main ones that you should focus on. And you can do this on any pair whatsoever. If you go to, okay, what is this? This is NAS 100, for example. Okay, every single thing they all apply. All right. So look at this opening price right here. Okay. So we expected the market came back into that price before dropping. Okay. So let me show you the bullish version right there. You can see the market came back into it before going up. Okay, so those are bullish and bearish opening prices. And then we do have the continuation when the market broke a high right there. So the middle of section of it, the market came back into it before going up. So this happens everywhere. It doesn't matter what chart, it doesn't matter what instruments you're trading. This happens all the time. Okay. Um, the next thing I'm going to talk about is obviously, um, how do you use it? Okay. It's quite simple. Using the open price, I usually look at the higher time frames. When I am setting up my charts, my trades for the week, I look at the higher time frames and then I take my cue from there. All right. So let me give you an example from what happened last couple of weeks with US 30. Okay, so now this was last week and this was 2 weeks ago. So 3 weeks ago, this is what I saw. Okay, I'm gonna use the replay button to see what I'm talking about. Okay, so this is how the market closed. All right, that is 3 weeks ago. So all I wanted, or what I was expecting the market to do was just to come back down here and then we take it up. That's all I need to. That's all I am expecting. Okay, and what happened? If I play the candles, and you can see how the market, you know, started to open bullish, and then started to. So that is second day in the week. Remember, we've got 5 days in the week. So first day is the second day. That's the third day. The market is coming down. That's the fourth day. Market is coming down, and then the fifth day, the market came into that level. All right, for 2 weeks ago, and then this week that we just completed. I'm gonna play the candles 5 days again. So that is one. That's first day, second day, third day, fourth day, and then this is where we are. Okay. So with this, it will tell you exactly what will happen in the coming week. Okay. It's quite interesting, when I hear a lot of traders saying that, oh, I don't know what to trade next week and all of that. You can actually use this powerful method for you to understand the direction of the market for the week, and you just trade towards that direction, and that we're using whatever model you want to use in trade. Okay, so I'm going to show you one more example, and then we'll take it out, and then we call it a day tonight. Just give me 1 second. Okay, all right. So um, last example I wanted to show you guys is how you can tell if the market wants to kind of retrace. You can see this market is going up, and then you want to know when it's probably going to retrace. Okay, so when you have a closed candle like this, okay, you're able to know when the market is going to probably come down. All right, and how you do that is just to drop down to the next um, time frame, and then we call something a sell decision. All right, when the market has showed you reasons why it wants to pretty much come down. So I expect the market to come to around this area um, before the market will ultimately fall. And if it does not fall, we would also look at this area. So we've got two areas now that we're expecting the market to go to, either over here, fall, okay, or to come all the way to the next line and fall. Either one of these things is going to happen. Okay, so as a trader, you must be ready. Okay, so if I play this candle, so let's see what happens. So can see the market came into the top bit, and expect so on Monday the market just went into it. So let's see what happens on Tuesday. Tuesday market is coming down. Wednesday market is coming down. Thursday market is coming down. Friday market is coming down. So this is where you would end the week. Okay, for me, market was going to go to, or the market was going to come into this level as my target, and that is exactly what happened for that week. All right, so I am going to be stopping here, and then we'll continue the session next time. Thank you, guys. Bye.